right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Before I continue on, I want to look at one thing really quick before we even look at. Hans was saying something about. I didn't even see the comment about looking at crude or whatnot. And I had talked about commodities and about correlations. So I want to take a look really quick at the gold market, and the reason why is because gold's been bouncing, but I want to take a look at something here really quick. Let me stand by really quick. Okay, I'm drawing through this these wicks, because those wicks. I'm looking at some other. Let me go over to like a hourly really quick. You can see it was like this crazy move, and I don't really know what the move entails, but I'm kind of bypassing it a little bit, and what I'm thinking is gold may be finding some resistance soon. Some I just wanted to take a real quick look at here. Okay, because if gold starts to roll over, then you gotta, it's like I have a feeling gold's finished like rallying, and so if that is the case, it might set up for some dollar, you know, it might set up for a little bit of dollar. A dollar bounce here in a moment. So just keep your eye on gold. I'm watching it really closely here, really closely, because gold's been a little stronger, but if it stalls up here, it might, like I said, it might turn around the dollar a bit. Just be careful. Okay, let's grab the bias chart, and we're gonna get to work. So let's grab it really fast. All right. And let's start with the euro dollar, and here's the euro. So what I was hoping for is I'm hoping for a move back above 113. So if you just kind of zoom in a little bit here, well, actually, let's stay with zoomed out first of all. So I believe that we're in a consolidation pattern ahead of, hold on really quick. We're in a consolidation pattern ahead of the Fed meeting in a week and a half. I thought we were going to go lower than higher, but we're higher at the moment. And I have a feeling that we're gonna stall here. So this trend line is very, very important, which means that today's highs are ultimately really important. I don't think we will take out today's highs, and we're not taking out this 114. If we take out this 114, I will write off the dollar. For the very near term. I don't think that's going to be taken. So therefore, I want to be trading on the short side of the euro ahead of this number. So if we can get a rally back to, like I said, 113 or so, I would play the euro back to the upside, or excuse me, back to the short side if I can get it. So, and we're getting close. I don't want to short it just yet, but I want to short a move maybe up to 113.10. You can see this low here. Actually, let me grab a different line. Low, spike high, and remember, there's probably some traders in Asia last night that that got long the euro. That's probably starting to think, maybe if I can just get out somewhere near 113, I'm going to do it. So 113.10 is resistance, and I still think we're in a range. Okay, now That's if I actually, if I can, let me just do that really quick. I'm going to put in an order in the euro dollar for a half size limit. I think I'm going to put in a limit of 113.05 short. Okay. So if I get triggered, I get triggered. You know, that's I'm gonna take that trade if I can get it. So 113.10. Now support, what's going to turn the euro obviously lower is going to be a move below today's lows, and then that'll probably take us back down here somewhere. You'd have to start looking at retracements, but I would assume you know somewhere down here towards a 50% or a 618 will be a likely target if we can take out the support. So that comes in about 1250. Let's just say roughly, because that's today's lows, right? 1248. So let's just say 1250 is support today. Okay. Let's go look at the cable. The cable's underperforming a little bit, but it's getting dragged up as as some of the commodity currencies are stronger, like the Kiwi's hitting new highs. The Aussie is back above 77 cents. So the pound's been kind of drug up too. So let's take a look at the pound. Now the pound dollar, you see these spikes everywhere. It's just real crazy price action this last couple of days. I mean, crazy in a sense that it's like, man, that a lot of these moves came out of left field, if you will. So right here, we've got resistance that is right up against. Well, it comes in around those spike highs, but I want to find out. See, it's not even at any fib level either, which makes it so interesting. Very wild moves. Surpassed 161% extension. So really, I guess horizontal resistance is important. So 153.70 at this point. 153.70. And we are definitely in a range here in the cable. And support. Just about a 50% retracement, but really support comes in at 152.70. Okay, that's support. Let's go take a look at the Swissy. So here's the Swissy, and the Swissy. So we broke through. What this is interesting, because if I remember correctly, and we're going to do the work right now. This was not a fib level. This may be because it is. It's a 618. Now, so I know I'd said this yesterday or the day before yesterday, or maybe last week or something. If they ink together some sort of Greek deal, I would be thinking I would think it's okay to buy the dollar Swiss. Um, if they put together a deal for Greece, it's not a and I had another comment that came in from, I think it was Jan. Hold on, let me go back and see this again. Oh no, it wasn't Jan. It was Paul. Paul writes in, he goes, Blake, even if putting together a Greek deal happens, how would it really be good for the Eurozone? What about Portugal, Ireland, Italy, et cetera, et cetera? Well, remember, they're not really putting together a deal. They're just extending, I think from what I understand, and I may be completely off base here, all they're doing is they're extending aid to Greece under the same terms, right? They're extending the aid to Greece for up until March of 2016. This will allow Greece and the rest of the EU to really work out and renegotiate everything, from what I understand. And again, I'm the details are not, are not clear to anyone in the market at the moment. So just anyway, so I think that I don't know if the all clear is out for the Swissy, but I will tell you that it did stall at a 618. And so if you wanted to get long the Swissy, and I'm not suggesting that you do this, I'm just saying for those of you that are hell-bent on trading the Swissy, which I'm not at the moment, I'm still, I think the term I've been using is disenchanted with the Swissy. I really am just not excited about it at all. But if you want to trade it on the long side, just keep your stops below this most recent low, which comes in at basically 92.40. Okay. All right. Now resistance for the Swissy. All right, back up at this 50% retracement, and the reason why I say that is just you can see how big this level's been. Resistance here, resistance here, resistance here, support there. That all comes in around 93.60. So it's just really choppy. Again, I'm not excited about the Swissy at all. It's something that I have really no desire in trading at the moment. Let's take a look at the yen. Okay, the yen, like I said, I'm still on the short side, and if you don't know why I'm short, just because I tweeted out the chart on Friday, shorted it here. Barry, who manages a hedge fund as well, he brought me this yellow line. I wasn't even looking at that at the time. I was really just looking at the 161% extension. So I'm still on the short side, and I don't mind being on the short side of the dollar yen. Matter of fact, any rally, I wouldn't mind adding back because I closed out half of my position, moved my stop to break even. But I might actually, if we bounce back, add back what I had sold and then move my stops completely above 126 and risk above 126 now that I've already closed out some profits. So this trend line that we were following that we broke below, that should offer really good resistance on the way back up. So that'll be 124, basically 124.50, I would suspect. So now any rally back to here, probably be right there, will be at 124.50. That'll be great resistance. 1.2450, whoops, 124.50. That's going to be significant resistance. We have gone from a bullish trend because we have broke some uptrend lines and we started making lower lows and lower highs. We've gone back into a range environment from bullish environment. Now that doesn't mean that the bull market can't reassert itself. It's just we're losing that upside momentum now. Let's take a look at where support might be. So probably the best thing for us to do at this moment, let me get rid of this triangle, remove that, we don't need that now. I'm going to remove this for now, and I'm going to remove this for now, just trying to minimize what we're looking at here. Oh, and I wanted to show you guys this. I noticed this as well, just so you guys can see it. See, we've taken out a lot of uptrend lines. So with that being said, low to high, 38% retracement, a lot of support down through here. That breakout point, that comes in at 23. basically 23.30, 23. There's one 23.40, probably 23.40. I would say right through here. Pretty significant support down at 123.40, roughly. Okay. All right. All right. Let's take a look at the Canadian. The Canadian just might have done a false breakdown. That was a stop run, big time. 38% retracement. Look at that. Look at the wick. Be really careful with this one. Okay, let me do something really quick. See this this trend line right here. Let's go to the daily chart. So see this trend line here? It may be parallel with this one right here. Oh my God, Mr. T is on TV. I love Mr. T. Man, he still looks the same after all these years. I pity the fool. All right. I'm sorry. I just looked up and I saw Mr. T. I can't help it. Okay. Anyway, so be careful of this false breakdown. I think that's it's 38% retracement is going to hold. Looks like it. And now the risk is that it comes whipping right back up. Okay. Be careful if we get back above into the 70s with this Canadian. So support here is at 123. Let's just call it 123.20. I think we spiked down to 123.28. Previous resistance over here, 38% retracement. Let me make sure I got that number correct. Yeah, it comes in at 23.15. So that's going to be pretty key support. 1.2315. It's a 38% retracement. So that's going to be key support. Resistance. So where, if you're on the short side of the Canadian, I guess the question is, where do you find out I'm wrong? You know, where do you go, wow, this thing's really gonna, this thing's really gonna squeeze me, if you got on the short side, because you got to think about the pain trade. Where's people who's short, where are they in pain? It's hard to say here. Probably a move back above 123.80. I suspect that's resistance right now, but we may break back above that wall while we're on air here. There's 6 minutes left in this bar timer, so this candle's got 6 minutes left. If we close back into the 70s, it's going to set up a long wick and a false breakdown. So 1.2380. And we are in a range. Okay, let's go to the Kiwi. So the Kiwi, this is very similar to the Canadian, what we just saw here. And by the way, let me remove this and remove this. I want to remove a lot of stuff with the Kiwi. Okay. As long as we remain below $72, okay, 72.10 really. I am starting to look for opportunities to short the Kiwi. I already shorted half position at 71 67. The guys and gals in the chat room know that. I already started nibbling. If we get another move up towards 72, I'm going to add to it. Because as long as we stay below 72 cents, I want to stay on the short side. Let me get rid of this line real quick. I don't think we need this one either. And we stopped at the 127%, so you know why we stopped there. I don't think we need that right now. Okay, so as long as we stay below this blue line, I'm going to stay on the short side. I just shorted a little bit a little while ago, maybe about a half an hour ago. I'm going to add to it up at 72 cents, and I don't mind being short here. But what I want to see is I want to see sometime today for us to turn lower. Now the RBNZ does meet tomorrow, okay? So that's also something that we need to pay very, very close attention to tomorrow afternoon. Not today, tomorrow. All right, so from here, 72 is really key resistance. That is really big resistance. We are still in a bearish trend, and until we get above 72 cents, we are in a bearish trend. Okay. And we're support. So I guess support's going to be like the overnight low, because see what Kiwi longs are probably worried about right now is a false break. Just like the Canadian might have given a false breakdown, this Kiwi might have given just a false breakout, just a stop run. Okay, 70.85 will be really strong support. It's very choppy, guys, so you have to be very careful. I'm not opposed to taking, just scalping out profits if I can get 20 or 30 pips here and there. All right, when we come back, we're going to do the Aussie, the dollar index, probably look at the peso, which is testing support right now, and then, the Nordic currencies as well. So don't go anywhere. Thanks, everybody, for being here. I'll be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. I was just looking at the euro dollar. I mean, we were screaming towards lows on the day. There's a bunch of comments from Germany saying European, well, first of all, Varoufakis and I still have differing views. European integration is needed for global stability. There's comments that it's insufficient right now. The proposals from Greece, so who knows what's gonna happen. All I know is the euro's coming under a little pressure, and I'm starting to think that my sell at 113 is not happening. But we'll see. We'll see if we can get it. Anyway, it's just choppy out there, guys. Let's go over to the Aussie. So the Aussie dollar, as surprisingly, it been underperforming even after the data that came out last night. We saw business confidence numbers come in a little stronger in Australia overnight. We had inflation data out of China that came in weak. Obviously Asia's dealing with a nice bout of deflationary forces that much of Europe and the U.S. had been dealing with. It's now starting to plague Asia. But the inflation data that comes out of China also allows for speculation that China might do more as far as interest rate cuts or more stimulus. That has not helped the Aussie as much as you would think. I would have thought that the Aussie would have actually rallied more significantly yesterday based on the data that was released both in China and the Australian trade balance or Australian business confidence numbers. Anyway, the Aussie, you can see what we've done here is we've taken out the downtrend line yesterday. We back tested it this morning. So this is how important 7650 is. 7650, let me take this red line. I'm just going to move it. This is now a very, very important support for bulls. Okay, as long as we're above 7650, I'm going to put an asterisk there. We're going to thwart off a lot of downside. So if you guys want to, short the dollar on bounces, then the Aussie might be a good play. Being able to play the Aussie on the long side. If we back off to 76.50, 76.40, that's probably a decent area. Right now, this is going to squeeze anybody who's short. Is if you get above that spike high there, really above the spike high from yesterday. So let's just call it 77.25 roughly, above 77.25, and it starts to squeeze. Okay, we're in a range. Okay, we had been in a pretty bearish trend in the Aussie, but we're starting to stabilize here. So we're starting to, get in that range environment. So a move above 77.25 should do the trick. That should squeeze the market a little bit here. Right. Question is the euro going to allow it? I mean, if the euro slumps to 111, unfortunately the Aussie's going to slump with it down to 76.50 or whatever. So you got to, I think what happens with the commodity currencies from here is more of a product of, and more of a result of what happens with the dollar against everything else. You know what I'm saying? Okay. Let's take a look at the dollar index. So here's the dollar index, and let's zoom in a little bit. Okay, and let's do this. Okay, so here's the dollar, and I'll actually zoom out first. Okay, and really try to hammer all this out. So if you take the spike low to spike high, 618 spike lows through here, this is just telling you how major the support is in the dollar right through here. Okay, and I want to do another line actually. Very significant support through here. So I'm going to just say roughly 94.80, big support. 94.80, huge support. It's like I said, there's a 618 right here at 92. There's all these spike lows, spike low there, spike low there, spike low there. Actually, let me delete that blue line. Let's put in a really key support there. Now, as far as resistance goes, that's going to be a little trickier, I think, because I mean you can see the 4 hour. I mean we're probably near intraday highs, but even if the dollar rallies, you have to imagine that we come up to here. So even as we make it up to 95.80, 95.90, this is going to be a really, really strong resistance. So even if we get a rally here, it's probably going to just stall, in reverse, I would think. Okay, somewhere up in this neighborhood. So anyway, any rally up towards 95.80, 96, going to be it's going to meet some sellers. So I'm going to put in 95.80 for now. I'll put 95.80, 96. I mean, those are both going to offer some resistance levels, and we are in a range environment. Okay. Okay. So real strong support down here, really good resistance here. We're about mid-range. So and use the exaggerated moves to trade into. If we start spiking up in the dollar, use that as an opportunity to short it. If we get a spike down in the dollar, use that as an opportunity to buy it. Try to play the extremes here instead of getting stuck at mid-range. All right, let's go to let's go over to the peso. And I'm going to take questions here in a moment. So here's the peso. All right. So we're holding, you know, the support we wrote down yesterday. We had 1560 and then 1566, right? Like this is all the kind of a buy zone, if you will, right? Support, support. Remember, this is uh, multi-year highs that we hit. We pulled back, and you'll also notice that there's this trend line, this support that comes in, right, right through here. So we're right at 1560. So if you want to be a buyer of the U.S. dollar Mexican peso, this is probably not a bad place right here. Maybe even a little further down to 1555, but these are all, you know, as long as it remains above 1555, it's still bullish. So I'm going to write down 1555. Okay, and then resistance. Well, it's going to be whatever the spike highs were overnight, right? This 1566 is a very pivotal area because it's multi-year. It was the multi-year high breakout point, and you can see how well it's supported on the way down and on the way back up. So 1566 is resistance right now. 15. All right. Let's take a look at the Norwegian krona. Let's just see if there's any setting up here. So here's the Norwegian krona. Got a little double top there, or key resistance. That's also at a 618. Yes, it is. So this is all actually really important here. I'm going to put in this range because it doesn't matter which break of this range happens. Whatever happens, you're going to get an extension. So all you have to do is do this. Whichever way the move out of this range, for you guys that trade the Norwegian krona, it's going to be good for you. So no matter which way we break, we're going either there or there. So you got a 770 and 8. 770 and 8. So, you know, we're right in the middle too. Oops. Okay. Swedish krona, I don't think there's much going on, but maybe there is. So we'll look. Just very sloppy range here. All right. Well, I think that's pretty much it for now. And let me take some questions.